Everyone, thanks for joining me here. I've got my good friend and special guest, Mr. Reed Goossens, all the way over from the Australian continents. Appreciate you taking the time with us today, sir.
G'day, Dr. Jeff. How you going, mate?
I'm doing great, and I've heard several of your podcasts. I've heard your story. I know you're really big into real estate. You're helping people. You're helping a lot of doctors with real estate, passive income. Some people out there may not be too familiar with you, so I know that you came from the States, from Australia. That's a really, really cool story. So, can you share
Sure.
kind of what got you from Australia to the States?
The 30-second pitch, which I'll extend, but essentially was for two loves. Love of New York City and the love for my girlfriend, who's now my wife. So I moved here in 2012, but we had met when I was backpacking around Europe in 2009, and we stayed in touch. Erica, she moved to Australia in 2011 for a master's degree. Coincidentally, just kismet, whatever you want to say, and we started dating then, and then we're saying, hey. I really wanted to move to New York City. I really want to just, live as an expat. My background's in structural engineering. Like I can get a job here pretty quickly. And yeah, I packed up. I was already earning, high income job in Australia as a civil engineer. I said, screw it. I was 26, 27. I always thought to myself, would I regret not making this decision when I'm 60 years of age? And, I look back now 10 years later and go, geez, look what I've been able to develop. And so, yeah, that was the coming to America story, was just really to come to be an expat, just to live here for a couple of years and then probably move home. That was it. And here I am 10 years later. I've built a big company with, big-ish company. I've done about $650 million of assets under management. We're going to probably hit over $1 billion in the next year and a half to 2 years in terms of valuations of assets, but it's all in the multifamily space. And my background in structural engineering, I worked for, when I moved here early on in my career, developers and engineers to sort of come from that institutional world of knowing how to build stuff. And then I've applied that in my business of RSM Property Group, which I'll go out and buy existing multifamily. And we have investors like doctors and lawyers and dentists that come and invest with us alongside of us, and they invest passively. And, we look for investors who, are higher income earners and want the benefits of investing in commercial real estate, but they may not necessarily have the time or the energy to go out and find it. So it's a bit of a symbiotic relationship and a win-win for all of us.
All right. So my brother is also a civil engineer. He works literally right down the street from me. So for those out there that are watching this, that are engineers, doctors, whatever, they're professionals, just like you were a civil engineer. So what kind of caused you to go from, hey, I'm going to my 9 to 5, I'm working for somebody? What was kind of that switch? What was that moment to get you from your career to at least thinking about real estate?
Yeah, look, I think the big thing when I came back from traveling, so I graduated in 2007, University of Queensland. In 2008, I went to London to work on the 2012 Olympic Games as a structural engineer. But in 2008, because they were, you got to build infrastructure. It doesn't just happen. So when I got back from that trip, I'd met Erica. I remember just thinking to myself, geez, I really enjoyed studying engineering, but I didn't love being like a small cog in a big machine, right? That's ultimately, and I had this yearning to want to do more and be more. So I really needed, I was like, how does someone pay me to live my life, to go surfing and travel the world and all that sort of stuff? And it boiled down to, using my money, the money that I'd earned and saved, and essentially making it, when I left home for work that day, my money had to also leave home and go to work. So it started from an idea of like, well, I need to be investing my income that I'm getting, my savings, into something that's going to produce me, a good return in the future. Now, when I started down this path back in 2008 and 9, I read the book Rich Dad Poor Dad, which talks a lot about the different, the quadrants, whether you're employed, whether you're self-employed, whether you're a business owner, whether you're an investor, and how working through, there we go, it's on the screen there. If you haven't read it, highly recommend it, but it talks about the transition from going from a W-2 into self-employed, into being a business owner, into being an investor. And that really resonated with me, and it will resonate with a lot of high income professionals is how do you make more from your side investments, right? How do you make more? How do you reduce your taxable income? And the ways in which I figured that out was through investing in hard assets, i.e. real estate. So using my income as a W-2 when I was a W-2 employee, at a high tax bracket, to then try and offset that, that tax bracket by investing in real estate, so I get passive losses and all the other benefits of investing in a hard asset. So that's really why, to try and it started from a burning desire to be my own boss and eventually get to that investor status or investor quadrant as he talks about in Rich Dad Poor Dad.
Yeah, I think most of the people, actually, I think all the people that I've ever either spoke to or interviewed like you, it always starts with somewhere in their life, it's the Rich Dad Poor Dad. What's really ironic about that is, and let me make sure that I'm doing this correctly, but in 1996, I was a senior in college, and I read The Millionaire Next Door. And it was all about, so this was 97. This was 1 year after. So I read The Millionaire Next Door, and it's all about your typical 401k millionaire. They interviewed all these people, and it was all about live frugally, buy a used car, buy a used pair of jeans, maybe buy a used pair of shoes, boots, I don't know, work for 40 years, put your money away. But, in 96, $1 million in a 401k, that was a lot of money.
Yeah.
Today, try only having retire with $1 million in a 401k, the 4% rule. You want to try to live off 40 grand a day. That's not going to get you much, especially, in California, where you are. But so I thought it was really ironic. So I read that book. The year later, Rich Dad Poor Dad comes out. I mean, it is the absolute complete opposite. It's get debt, don't get out of debt, get debt, get good debt, leverage it, teaches you how to work, how to get money working for you. Really, when I read this, and I read this, maybe 7-8 years ago. So it was a long time after Millionaire Next Door. It really made me mad because it was like I've been duped all along. Not just, what financial advisors have been telling me all along, just put your money in a 401k and work, let me quote, help you, or quote, milk you, for however many years, expenses and fees. But just the fact that, I was taught, I don't know about you growing up, but I was taught really the only way to make a lot of money, unless you're like a pro athlete, which I'm not, is you've got to go get a really good professional or specialized degree. So we spend all this time, money, energy, getting in a lot of student loan debt. And then you read this book and it's like, you don't even need a college degree to make a lot of money. And that's why you're seeing all these 20, 30-year-old multi-millionaires. And again, man, so that's what really made me mad, whenever I'd kind of read that book. But anyway, if for those of you that are listening or watching this and you haven't read Rich Dad Poor Dad, like Reed said, that's a very good foundation to start with. So back to your story. So you read the book, you decided you wanted to get into real estate. So what's next?
Yeah, so the getting into real estate was actually after I read the book Rich Dad Poor Dad, which I read it in Australia, was like, okay, I need to get involved in this real estate game. So how do I do that, right? Like, because Rich Dad Poor Dad is really good at describing the vision, right? But not necessarily maybe the steps 1, 2, and 3 to get you going, right? So for me, it was about, well, okay, what do I need to invest in? Again, I talked about real estate, but then you could go buy a business. You can, invest in the stock market. There's many things you can invest in. And for the individual who's listening to this story, it's like, what resonates with you? For me, I was a structural engineer, a civil engineer. I could build stuff. My dad, he was a high school teacher. He had a bit of success in, buying the family home, and that grew over time. And, he had a couple of houses and, pretty middle income type of household that I came from. And so I thought, That's it. It's going to be real estate. I like tangible things. So it was the real estate that drew me down that path. From there, I had to go out and start networking with people. Who do I need to be like in order to resonate their success? And I started going to networking events in Australia. And then when I made this transition to America, I think I was two weeks fresh off the boat in New York City, and I'm at the New York Real Estate Investment Associations. And I was gobsmacked at the amount of people in a room talking about real estate investing and talking about, this incredible wealth generation type of investment. And it was all readily at my fingertips. Again, this is before podcasting, this is before all that sort of stuff. But where I'd come from in Australia, we didn't have this great network of networking events. You look up any REIA across the country. There's one in LA. There's multiple ones here in LA. There's multiple ones in New York. Every single major MSA will probably have one. Get along. Start educating yourself about the benefits of using your money to work for you, right? The whole reason you mentioned earlier, giving your money blindly to a person who manages your 401k. Well, the whole premise of what Richard Porter is talking about is becoming financially literate, right? Increasing your financial IQ. You're listening to this podcast. You're listening to maybe one of my podcasts. We talk about increasing your financial IQ. So going back around to the real estate investment clubs, that's another way to increase your financial IQ. You're surrounded by other people. You're going there. You're learning about different strategies that you can, employ in your personal portfolio. Whether it be fix or flipping, or doing lease options, or wholesaling, or investing in multifamily, whatever it might be. These are great areas and great networking and platforms to go and learn more to increase your IQ, your financial IQ. Again, outside the stock standard, go to university, get a degree, get a job, and then retire when you're 60 years of age. It's pushing the envelope to try and again grow the mind and figure out that there is more to life than just putting your money where someone tells you to put the money. Right.
I spoke to a 52-year-old dentist from Kentucky this week, and he had been listening to, he had been watching several of my YouTube videos and blog articles. So he was, like you said, he was educating himself. He'd been doing this for a year, and it finally just got to a tipping point to where I think now, because the stock market's going down so much, all he's been doing, he told me, is just putting money in his retirement account. And I asked him, I said, well, how's that working out for you? And he has a kid that's a senior in high school, and he has a kid that just started college. So, I mean, he's got responsibilities, he's married. And he just said, I've gotten to the point where I can't even look at my account anymore. And I'm thinking, why? That's got to be like the worst way to operate.
Put your head in the sand.
It's like you're driving down the road blindfolded. You don't want to know where you're going because it's so bad, So that's what really got him to the point where I've got to take control, but he'd been hearing about all along when he's been telling his financial advisor, hey, what do you think about real estate? I think I'm going to take some money out. And, oh, no, you're going to lose all your money. It's too risky. And to me, I mean, that is just so wrong that somebody that doesn't know anything about real estate, and they're supposed to be, quote, a fiduciary and all this, it's so unethical,
well, because the system's rigged a little bit, right?
What's that?
The system's rigged. It's like, of course, you're going to go to a financial advisor who's going to tell you to invest in certain stocks and bonds. Again, the reason why people put their head in the sand is because they're afraid to go out and learn and what. Yeah, look, to go out and take control of your financial future sounds daunting, right? And to go out and learn and read books and we're sitting here today, to those listeners, we're not saying you've got to go out and do it the next 2 months. I'm a student of learning all the time, right? I'm still learning about different investment classes and vehicles and ways to be tax efficient. I'll never stop learning, but it's the curiosity that you've got to challenge yourself to say, hey, I want to be better for my family. I want my financial situation to be better. I don't want to have to put my head in the sand, and I want to be able to go and take action on that. So that in itself is probably one of the things that, like, you got to talk about when you're speaking to these people, that they sometimes don't have they're just scared, right? They're scared to go out and challenge the status quo, and that's okay. But you have to also, you can challenge it more easily once you're educated. So it all starts with the education. It sounds like he's on a great path, listening to this podcast and many, many more to getting to where he needs to go.
Well, I talk to a lot of people, on a weekly basis, just like you. Do you think that daunting self-education process, do you think that's what holds people back mainly from getting into real estate?
Yeah, I think there's an element of it, right? I think there's the water, they call it the water cooler chats, right? There's the uncle and the aunties at the parties that have an opinion on something. And look, when it comes to understanding and being educated on where your finances are going, just pick up a book and learn a little bit more about it, right? It's not, if you look at most of the wealthiest people in the world, they have a big holdings of real estate, right? Real estate is proven, and this is around the globe. This is not just in America. This is in Australia. This is in Canada. This is in Europe. Having tangible physical assets is what makes generational wealth. And here's the reason, right? We all need houses. We all need a roof over our head, right? So when we need a roof over our head, it means it's something that we need. It's physical, and there's tax benefits alongside of that, because most Western countries have a tax code that implores investors to buy real estate, right? Most Western governments are not in the business of providing, mass housing. So they incentivize investors like us to own property. And that means that you reduce your taxable income through offsetting your interest payments, through offsetting, cost segregation. We can get all into, the ins and outs of it. But that's why governments write the codes the way they write them, is because don't look at the IRS code as a tax code of what I can't do. Look at it as what I can do, because again, the US government is not in the business of providing mass housing to the masses. So they want to encourage people, investors, to buy more real estate to provide a housing for the masses.
Yeah, and speaking of taxes, when I first got out, I remember I was at like a Christmas party or something, and I overheard two doctors talking about the taxes they paid, and it was like they were competing with each other. Like, who was the most successful meant paying the most taxes. And back then I was like, wow, he's paying like $350,000 a year in taxes. He must be making a ton of money. And now I hear that, I'm like, the guy's stupid. He should be paying zero in taxes, Right. And again, it's once you educate yourself, you're going to work a whole lot smarter and work a whole lot less, because if you can save $350,000 a year in taxes and work 30% less of the time, think about how much more time that you'll have, So for the high income earner that's paying a lot of taxes, what are some of the things that real estate can help them with, or how can real estate help them potentially?
Yeah. So in the commercial world, which is the world that we run in, and I'm talking about commercials, I'm talking about self-storage, multifamily, industrial, things that are, classed as commercial. So in the residential space, they classify that as 5 units or more. So it's commercial real estate, right? So when we go out and buy 150 units, and that's what I go out and buy, the benefits I can pass on to my investors is in a couple of ways, right? The first way is cost segregation, which means, the IRS code shows a straight line depreciation. And usually on a single family house, like the one I live in right now, I can depreciate, the roof, the flooring, the fans, all the sort of things that put the house together over a period of 27 and a half years. On a commercial asset, when it's a larger property, I can come in and do an engineering report, pay someone to do an engineering report, and they can go off and say, well, hang on, that fridge or that fan or that roof, it's not going to last 27 and a half years. It's only going to last 6 years or 7 years. So you can accelerate the depreciation of those assets, which will offset the income that is produced by that asset, right? So for example, if I'm, distributing to my investors, say 7% a year, right? Hopefully my depreciation on that 7% or on that distribution is greater than that of the distribution. So hopefully you don't pay any taxes on it. Now, again, I'm not a CPA, but high level, that's the benefits, again, goes back to the IRS code of what, there is other ways in which you can go and accelerate that depreciation to harness it sooner than 27 and a half years, which offsets the income produced by that asset, so which reduces your taxable income. So all of these things, again, not a CPA, but I've been in the business for long enough to understand these different benefits of costs, of things like cost segregation. So when they talk about cost segregation, it really just talks about accelerated depreciation over a shorter period of time.
To put it in perspective, so if somebody were to have $1 million in mutual funds and $1 million in syndications with you, they're both paying you 7%.
Correct.
From you, they would be getting 7% or $70,000 a year, probably tax-free.
Correct.
But taking 7% or $70,000 from the mutual fund, not only would you be paying taxes, right? You're drawing down on the mutual fund, but the way the stock market's going, it's probably even much lower than that.
That's correct. Yeah, that's exactly right. Yep.
So let's say you go 5 years out. So after 5 years with you, you've gotten 70,000 times 5. You've gotten $350,000 pretty much tax free. Plus that $1 million is appreciated.
Correct.
Right. Correct. Versus you've about drawn down on the mutual fund. So again, and if you're going to go with a financial advisor, that's what you're going to be dealing with. Always worried about running out of money.
Right.
And that was the big thing that really got me to switch to really focusing on real estate. I still have a practice retirement account. We don't do a whole lot with it, but at least we've got that. It'll probably just be something we pass to the kids or something. But the main bulk of our, focus is on, the real estate.
There is ways in which you can use retirement accounts, self-directed Roths, IRAs to invest directly into real estate, right? You can sort of have the tax benefits of a Roth, for example, and the tax benefits from real estate at the same time if you want to present a nest egg. So there are other ways there, but to your point, just to tie a bow around that, it's the difference between a paper investment and a physical investment, a brick and mortar investment. And you did a very good example there of comparing the two and how they would differentiate over a period of 5 or 6 years.
I remember in 2019, I was at a real estate conference in Dallas, and I was doing my due diligence on a syndication group. We went to breakfast, and I was thinking about investing with them in a property in Charlotte. And I was thinking about I had a traditional IRA with Vanguard that I wasn't investing in anymore. And I said, hey, I'm thinking about taking $50,000 out of that, opening up a self-directed IRA. What do you think about that? Do you think I should do that? He said, well, do you have access to your Vanguard IRA? I said, yeah, it's on my phone, on my app. He said, pull it up. I said, okay. So I pulled it up. He said, can you go back 5 years, what your balance was? I said, sure. He said, okay, now look at your balance and look at it today. I said, okay. He said, did it double? And I said, in 5 years? He said, yeah. I said, it didn't even come close to double. He said, there's your answer right there. And I got lucky because I did that. I put 50,000 in a self-directed IRA. I invested with him, his group. It was supposed to be a 5-year hold, returning about 85% over that period. They wound up selling it for 80% return in 2 years, 24 months.
Wow.
Think about where can you get those returns in the market? You can't.
No, and I will preface by, and let me put it into some context, right? So where I come from in Australia, if you double your money in 10 years, you're doing pretty freaking well, right? And so coming to the United States and learning about multifamily and commercial real estate, and that's the pitch that I use. I double investors' money in 5 to 6 years. If I do it quicker, fantastic. And again, past performances aren't an indication of future performances, but by and large, looking at a 5 to 7 year hold, you should be doubling someone's money in that period of time in a value add commercial asset, whether it be self-storage, multifamily, industrial. When you're adding value, which means, you're coming in, you're increasing the value, the rents, you're reducing expenses, and over time, you'll increase the cash flow and thus the net operating income. With that being said, you always have to make sure you understand when you compare it to other investments, what are you comparing it to? So your Vanguard investment, for example, it would have gone up whatever the percentage was. But you have to understand what is industry practices and standards for certain types of returns in this industry. You know, like someone who is, a high octane investor may say, "Oh, I don't want to double my money in 5 years. I think that's too low. Like, I want to double my money in 2 years." Like, all right, we'll go off and go invest in crypto. But look how that's going over the last period of a while. So in real estate, it is also about risk-adjusted returns. It's not the sexy highs of the stock market or investing in the new tech company or whatever. It is steady as she goes, over a medium to long-term wealth generation that can last for multiple generations.
You mentioned earlier you got a couple of books, Investing in the U.S. and 10,000 Miles to the American Dream. Tell us a little bit about those books.
Yeah, behind me, if you can see them on the screen, one's Investing in the US, the other is 10,000 Miles to the American Dream. The first one just came out of, I've got a podcast as well. It's been going for 7 years called Investing in the US. I started that as really to document my journey coming to the US, learning about cool things here in the United States, teaching others about, if I can figure it out, then so can the average American, right? Look, and here's my journey. And I documented it through that podcast. I was interviewing the cream of the crop, industry leaders like you're doing on this podcast, and then I turned it from an audio into written, right? So I was duplicating content over different sources, i.e., audio and now written. And then the second book came from through interviewing a handful of other Australians who had come to the United States who were also in the space of real estate. We started a mastermind program together. And I said, look, what if we got together once a year with our wives and our girlfriends? And, we were all Australians. We all, miss home a little bit. We can talk about, have the same banter. But we all had a similar story, but we're all in slightly different aspects of the real estate world. So we all decided to write an individual chapter. So that chapter, it's about 7 or 8 chapters. There's 7 of us who co-wrote that book. We all have the same story. Again, 10,000 miles to the American dream. We're coming 10,000 miles from Australia, and we've all achieved financial freedom in different aspects of real estate. So one guy's in there is talking about mobile home parks. Another guy's in there is talking about real estate technology. I'm talking about how to build your brand and become a thought leader. Another guy's in there obviously talking about multifamily. You've got another guy in there who's also an engineer. He just fix and flips, really low income housing. So talking about $100,000 houses across the Midwest, and he's just created a massive machine out of that. And again, it's all about our stories and coming to the US. And if we can do it, then so can the average American. And it's not a boasting thing; it's just more of inspiring people to get off the fence and take action.
You mentioned mastermind. How important is having a mentor or being in a mastermind or both?
Oh, hugely influential. We spoke about financial education earlier. And it's great. You'll read books and you'll listen to podcasts. But like myself, I got to a point where I was hitting a ceiling, right? I needed someone in my court because I could only go as far as my mindset was going to take me, right? Having a mastermind, having a mentor will help you be a sounding board to different options or different thoughts about where you should push to, in the future. Think about all the great, sports stars. They all have coaches, right? It's someone in their court to help them become better every single day. The same thing you can do in business, the same thing you can do in life. And so I've had many masterminds, and I'm still part of masterminds today. I've had many coaches, and coaches will be different as you grow. So when I started, I had a mentor or a coach who was really about the multifamily game and figuring out that business. Well, now I figured that business out. Now I have a different coach, which helps me with, become the best person version of myself. So it's better entrepreneur, better husband, better, thought leader. And she is a different coach who's got nothing to do with real estate, but she's still helping me grow my real estate business. And so over time, and I might have a different coach in 10 years' time, right? But I know that I always will need one in order to make myself better and push my business to the next level. Yeah,
I mean, the great, in my opinion, the greatest basketball player that's ever played, Michael Jordan, he had a coach, or he had multiple coaches. So yeah, you're right. And people trying to do this alone or by themselves, it's really tough. And I think it's really important to get around other people that are like you, that are, if you're a dentist, get around other dentists that are trying to do the same thing. And man, what you can learn, it's just going to expedite where you're trying to get so much quicker. Would you agree?
100%. And then little things like, I know you've started this podcast. I've started my podcast. My podcast has turned into a mentor of its own, like I get to talk to other cool people like yourself that we get to you're at the same sort of wavelength, right? And it keeps in, I always get off these calls and I'm bouncing off the walls, and my wife's like, have you had too many cups of coffee? I was like, no, I've just been talking to people who think the same way as I think. And there's something really intoxicating about that. So I definitely recommend everyone who's out there. Again, that's why I mentioned the RIAs earlier. It's local real estate clubs where you can go to, you can meet people tangibly. Now that with post-COVID, everything's online, everything's on Zoom. So there's other places, the world's at your fingertips. You can be a part of a mastermind that's in Europe for crying out loud. Like you can be anywhere, to surround yourself with other like-minded individuals, and that helps you move the needle forward.
Exactly. Well, man, I really appreciate you spending time with us today. For those that want to learn a little bit more about you, where can they go?
Easiest way is to head over to my personal website. It's reedgoossens.com. So it's ReedGoossens.com. It's a lot of S's, a lot of E's, a lot of O's.
I'll put a link. I'll put a link below this video. So I'll make
Awesome. And then if you're ever coming through Los Angeles and you want to say g'day, you want to go for coffee, you want to go for a surf, you want to go for a beer, whatever it might be, just hit me up at info@reedgoossens.com. Just make sure, give me a month's notice so we can get something on the calendar.
I've always wanted to learn how to surf, so I may hit you up.
Definitely come over and I'll teach you, my friend.
Awesome. All right. Again, I appreciate everything that you're doing. The podcast is great, guys. Look at us, the podcast, the books. They're all on his website. Again, I'll put the link below this video, and you have a great rest of your day.
Thanks, Dr. Jeff.